Have you ever wondered how to make money in real estate? Well, you're not alone. This path has led many to financial freedom, and it could do the same for you. In the grand scheme of wealth creation, real estate investing stands out as a time-tested avenue. It's more than just buying a piece of land or a building, it's about understanding the potential that lies within these assets. Take a moment to consider the benefits. Imagine a steady, passive income stream that flows into your bank account month after month from rental properties, or the joy of seeing your properties appreciate over time, growing your wealth in the process. And let's not forget the tax advantages that come with owning real estate, providing you with more financial breathing room. All of these benefits make real estate investing a compelling choice for anyone looking to improve their financial standing. So, are you ready to unlock the potential of real estate? Let's dive in. Before you dive in, first you need to understand the real estate market. It's like learning how to read the weather before setting sail. Location, for instance, is paramount. An amazing property in a less desirable area may not yield the returns you're hoping for. That's why it's crucial to research neighborhoods, school districts, and local amenities. Next, let's talk about market trends. Just like the stock market, the real estate market has its highs and lows. Understanding the ebb and flow can mean the difference between making a profit or taking a hit. Lastly, property valuation. This is the process of determining the economic value of a real estate investment. It's not just about the price you pay, but also the potential income it can generate. So, whether it's the location, market trends, or property valuation, each element plays a significant role. Remember, a successful real estate investment starts with a good understanding of the market. Now that you understand the market, let's explore the different types of real estate investments. The first one is rental properties. This involves becoming a landlord and renting out your property to tenants. It's a great way to generate steady income, but it also requires maintenance and dealing with tenants. Next, we have real estate investment trusts, or REITs. These are companies that own or finance income-producing real estate, and investing in them is similar to investing in stocks. You can enjoy the benefits of real estate investment without the responsibilities of being a landlord. Lastly, there's house flipping. This is where you buy a property at a lower price, renovate it, and sell it at a profit. It can be highly profitable, but it also carries a higher risk and requires a good understanding of the market. Choosing the right type of real estate investment is crucial in your journey towards financial freedom. Once you've chosen the type of investment, the next step is figuring out how to finance it. Financing your real estate investment is a crucial part of the process. The way you finance your investment can greatly influence the profitability and sustainability of your venture. There are several ways to finance your real estate investment, and choosing the right one depends on your personal situation and the type of investment you've chosen. Starting with personal savings is a great way to finance your investment. It's the simplest form and has the least amount of risk. This is because you're using your own money and aren't obligated to anyone else. However, this method requires you to have substantial savings, which isn't always feasible. Bank loans are another common way to finance real estate investments. Banks and other financial institutions offer various loan products tailored for real estate investments. They provide the funds you need to purchase your property, and you repay the loan with interest over a predetermined period. A key point to remember here is that your credit score plays a significant role in securing a loan. A good credit score can get you favorable terms, while a poor one might make it challenging to get a loan. Partnerships can also be a viable way to finance your real estate investment. In a partnership, you team up with one or more individuals to pool resources and share the risks and rewards. This could be a great option if you lack the funds or the credit score to finance the investment on your own. Regardless of the financing method you choose, it's always essential to have a contingency plan. Real estate investing, like any other investment, comes with its own set of risks. Having a backup plan helps you mitigate these risks and keep your investment on track. Remember, a well-planned financial strategy is the backbone of any successful real estate investment. With finances in place, you're now ready to buy your first property. Let's dive into the thrilling journey of becoming a property owner. First off, research is key. You'll need to investigate potential properties, looking at aspects such as location, market trends, and projected growth. Remember, in real estate, it's always about location, location, location. Look for emerging neighborhoods, access to amenities, and potential for future development. Next, you'll want to make an offer. This is where your negotiation skills will come into play. Consider the property's value, your budget, and the current real estate market climate. It's often beneficial to start with a lower offer, leaving room for negotiation. Following your offer, anticipate some back and forth before you and the seller agree on a price. Don't be disheartened if your initial offer isn't accepted. Negotiation is a normal part of the process. Stay patient and remember, the goal is to reach an agreement that benefits both parties. Once a price is agreed upon, you'll enter the closing phase. This typically involves a home inspection, appraisal, and finalizing your mortgage terms. During this time, it's important to stay organized and on top of any paperwork. Be proactive in communicating with your lender, real estate agent, and anyone else involved in the process. But what if you encounter a hiccup along the way? Well, it's essential to remain flexible and adaptable. Every property purchase is unique, so be prepared for unexpected twists and turns. Consider each challenge as an opportunity to learn and grow as an investor. Finally, remember that buying your first property is more than a financial transaction. It's a commitment, a responsibility, and an opportunity to create a better future for yourself. As you sign the final paperwork and receive the keys to your property, you're not just becoming a homeowner. You're taking a significant step towards achieving financial freedom. Buying your first property is a big step, but with careful planning and execution, it can be a stepping stone towards financial freedom. Once you've bought a property, the next step is managing your investment. This is where the real work begins. It's not just about owning a property, it's about maintaining it, finding the right tenants, and dealing with any legal or financial issues that may arise. Think of your property as a business. You wouldn't just open a store and leave it be, would you? Similarly, your property needs regular maintenance and updates to retain its value and attract tenants. Speaking of tenants, they are the lifeblood of your investment. Choose wisely. Look for those who will treat your property with respect and pay their rent on time. Legal and financial issues can be a hassle. Stay informed about the laws and regulations in your area to avoid any unnecessary complications. Lastly, always aim for a positive cash flow. This means your rental income should exceed your expenses. Proper management is key to a successful real estate investment, so always stay on top of things.